very keenly watching out for what TCS management and top brass has to say about their earnings. Remember, the numbers were okay. They were in line with estimates. I think the market just wants some clarity on the margin miss because, you know, the benchmark that TCS has set has always been so high that even one variable here or there would make the markets want to question on whether or not it's an aberration or whether there would be some headwinds that the management would face when it comes to margin maintenance. But other than that, you know, on all other parameters, whether it's deal flow, whether it's, the kind of budget that they're getting from clients, it all seems like growth is on track from every quarter. Even some of their segmental businesses have done really well. What's heartening to see is how much traction they're drawing from the digital side of the business. Digital contribution stands at 30%, and the growth there has been fairly impressive. It remains to be seen that from a valuation standpoint, where does the TCS story go from here? But that is something that only the management can throw more light on. And when I say valuations, it's not just purely about growth, but it's also perception of the market. Last year was a dream year for not just TCS, but for all IT companies. Part of it was related to the fall in the currency. But I think a large part of the story was also a good deal environment supporting them from all geographies, especially the US and Europe, which helped cushion the numbers quarter on quarter. Q3 is a seasonally weak quarter, so you know there could be some aberrations here and there, and I think that's what the management will explain when we go across to them, which we will right this second. Nikunj, the management joins you.
1, 2, 3, 4, 5. Right, Tanvi, thanks a lot for that. Well, TCS has once again started the earnings season with style, and to take the conversation forward as to what lies ahead for the IT sector and for India's largest IT company, we are now joined by the CEO and CEO. Gentlemen, Happy New Year to both of you, and thank you for joining us.
Happy New Year.
Happy New Year to you too, Nikunj.
Rajesh, all is well?
All is well.
Okay, so before we talk about the way forward for 2019, let's take the clock back. Let's talk about 2018. It was a great year for your shareholders. So, when you started the year 2018 in terms of visibility, deal pipeline, order inflows, customer interaction, how exactly is 2019 different from 2018?
We went into 2018 actually on the back of very large order inflows coming from very mega deals, one-off large mega deals, and a bit of a soft year behind us. So the entry into 2018 was in a very different construct compared to the entry into 2019. In 2019, we are going in on the back of a very strong order pipeline, both bookings as well as a deal pipeline, constituting mainly of fairly standard orders rather than one-off mega orders. And we have been seeing this demand ramp up and the growth acceleration through the course of the year. So we are going to get into 2019 on a growth trajectory which is very different from the growth trajectory that we were on last year. And to back that up, we have been hiring strongly and participating strongly in this recovery. So we're quite optimistic going into 2019.
Okay, so let me put the words in context here. You hired more, your deal pipeline is better, there's a structural reboot in the business which you're doing. So 2019 is looking like that it will be better than 2018? In all ways?
I don't want to put words in my mouth, but 2019, our entry into 2019 and the visibility that we have is much better than where we were earlier. Obviously, we also hear the same headlines, we also hear the same news about macro instability and various items. So, barring that, we are quite confident about where the demand that we see from the clients that we are talking to.
And yes, the real comeback for TCS has been because of stabilization in the US and the BFSI vertical. Can Brexit be the spoil spot?
Now, one is the stability. The other thing is the kind of offerings that we have launched during the year. You know, in terms of digital offerings, blockchain, IoT, in every single area, we launched a number of digital offerings that helped. Second is the whole Business 4.0 thought leadership framework, right? That is receiving tremendous amount of traction in participating in growth and transformation opportunities. Brexit, we always said that, look, you know, it's a mixed bag. We don't know what's going to happen. But whatever happens, right, today if we look at UK and Europe, it's growing upwards of 20% year on year for us, right? So the demand environment in UK or on all our major markets has been good. We are participating in a good number of digital opportunities. We are participating in institutions which are moving things to a cloud. All the cloud migration, digital interactive, every one of the opportunities we see a tremendous amount of demand. The pipeline kind of reflects that. $5.9 billion of TCV for this quarter is far superior than what we thought. Overall, I think we are pleased with the way that where we stand in this financial year at this point in time. And Business 4.0 is about embracing risk in a way that which is what we have done, right? We saw the demand. We see that, look, contracts are getting signed. So we hired a lot more in this particular quarter to make the people ready to take on those opportunities and move forward in 2019.
Okay, I'll come back to the employed and the margin front, but from a market standpoint, what investors and shareholders would like to perhaps understand is that $6 billion roughly is your digital book. It's growing at 40%. The base was low. But at $6 billion, can you grow at that rate?
I think so. I think,
at $6 billion, 40%?
Yeah, in my opinion, I always maintained that, look, over a period of time, everything that is we are going to do, a good percentage of what we are going to do will be digital. While we continue to operate in some of the traditional services, a lot of these things are getting integrated, right? Things like Internet of Things, digital interactive, the apps that you do, the cloudification, they're all getting integrated, and the digital core in the back is extremely important. So in that context, I think, the share of digital revenue will continue to increase. The demand that we see, the pipeline that we see, is also reflects that kind of a sharing. And I think, wish as well. So we should be growing a lot more in digital. The acquisitions that we have made, whether it's a W12 and or the Bridgepoint, all of this is going to help in accelerating an integrated digital core-led, digital transformation story for us.
Right. Rajesh, let's clear the air on margins. Now, scale is back, business is back, pricing is back, but on the margin front, there has been a drop. Can I safely say that what has been your preferred band of 26 to 28% may not be the ideal achievement for this year?
Oh, I wouldn't say that at all. If you look at the 9 months to 9 months numbers, our margins have expanded by almost 120 basis points compared to where we are. So whatever happens, we are going to be very close to the 26% in any case as we exit 19. And from a more medium-term perspective, we see no structural challenges to that preferred band that we are looking at. There will be period-to-period volatility in it, either introduced through currency or introduced through fluctuations or volatility in demand. But we are very focused on one thing, our investment agenda and our focus on maximizing demand that we see in the field and backing the sales team on it. That takes priority over cost management and margin management. So we are quite confident about the position that we are in, and we should be able to address some of these cost challenges that we are seeing over the course of time.
Some of my friends who track your company with a magnifying glass, they are of the view that TCS in this year could go for growth and they may compromise on margins. Are they right?
TCS has never had a culture of thinking of growth and margin as mutually exclusive. We have always maintained that these are two different aspects of the business. And on the growth agenda, your friends can rest assured that our investment agenda and our aggressiveness in participation in demand and our innovative deal structuring and our hunger to participate in very, very innovative new solution sets and new markets is not diminished in any form, and we are in a very good position to continue that agenda.
When I spoke to you in your new capacity for the first time, I said double-digit growth. Both of you took a very deep breath and you say we are working very hard towards it. So my compliments that in constant currency, according to our numbers, hopefully you would be there. But is double-digit growth the new normal? Why don't both of you tell me a single answer, yes or no? Double-digit growth, is that the new normal for TCS?
The new normal assumes that it is externally given to you. That double-digit growth is 100% our targeted trajectory, and we have no intention to get off it.
NGS, Can US macro spoil the party somewhere? We don't know which way US economy would move. We don't know what will happen to banks now. We don't know what will happen to a lot of complicated issues on trade war. Is that a risk, or that is something which is only in headline, it will not affect business?
No, there's always a risk in any one of this, how depending upon how it pans out. But if you look at the consumer spending that has happened during the holiday period, it has registered a growth of 5 to 6%. So the overall consumer confidence in the US market seems very high, right?
Okay. Why is the consumer confidence so high? Why is this happening? Why in last 12 months, 18 months, there has been a dramatic change in demand, your commentary and your confidence?
I think at least, the technology development that has happened, whether it is, related to digital or non-digital, each one of them, they are maturing fast, very rapidly maturing. And the ease of doing business with respect to these technologies, the way that customers are able to deploy and access what they want, is clearly a visible change that I have seen in 2018, right? So that has contributed to people, having an experience that, okay, if I want to do something, I get that done, as opposed to facing friction, along the path. So the technology has been a great leveler, right? And that in a way, I think, people see the opportunities. People see the possibilities of getting connected on one hand. The second is that, look, each of the products that are getting launched, it offers something new, something possibilities. And from a corporate side, the opportunity to create ecosystems and participating in ecosystems, again, the technology has enabled seamless creation of these ecosystems. So that, I think, is the biggest positive momentum that I see, both on the institutional side of it, enterprises side of it, and the consumer side of it, which has resulted in all this demand and the positive momentum.
So Rajesh, 30 seconds, you're not calling a tough spot, whether it's the BFSI space or Diligenta or Japan or LATAM, all is looking good. But should markets take heart from the fact that you hired 23,000 new employees in the quarter gone by, which is a very fat number? It was 7,000 plus last year,
yeah.
Which just tells you that it's a 3x more hiring.
Absolutely. So we are, as I said, we see the demand, and both in terms of closure, yes, we see both in closure as well as on the pipeline. We are calling the demand out. We are sharing that visibility with all our stakeholders, and we are backing what we see by hiring strongly to be in a good position to service that demand. So we are backing our own visibility and hoping that that will play out well.
Okay, so if I have to summarize today's interaction, correct me if I'm wrong, according to you, 2019 in terms of deal pipeline, engagement, in terms of order book, in terms of visibility and margin is much better than 2018.
Absolutely.
Okay, thank you for that, gentlemen. You've started the earnings season with a style. Once again, 2018 was a great year for your shareholders, and I hope if the growth momentum continues, 2019 may not be different. And NG, as I was being told that you are slightly under weather, but when you deliver on such fat margins and such strong order book, you don't have to worry about that. Your confidence in your voice has been strong this time.
Thank you. Happy New Year to you and your viewers.
Thank you very much. For the moment, I'll give it back to the studio, and then I'll come back with the CFO and a lot more engagement with TCS Top Brass.
Yeah, thanks, Nikhil. Thanks for that engaging conversation. And